Amazon hitting yet another record high on Friday. It's the 8th time already this year that it's done that. Is there any way to play Amazon for? I mean, is the stock overvalued? Still have value? Stacey Gilbert, Susquehanna, David Seaberg with Cowen. Two bullish firms on the stock. In fact, as I was doing a segment for CNBC, Stacey, on a new initiation, I looked up price targets and I found out that none other than Susquehanna has the highest price target on the street at a staggering $12.50. Why do you guys like it so much?
Right. Yeah, we look at it. I mean, it is from our analyst perspective, who is Shyam Patel, great analyst, obviously loves this stock, $12.50 price target, as you mentioned, Brian. Really looks at it from a valuation and a growth standpoint, divides it up into 4 different businesses, gives each business a multiple, comes up with the sum of the parts valuation of $12.50. Really just sees it as the best growth for a large cap internet company. Your previous question you asked is, how can you play this? Obviously, you could play the stock. We have a $12.50 price target. Our downside, if we were to say we're completely wrong on everything, where do we see the stock going? That's really more in the 600 level. So we do see a significant upside bias here, which is obviously why we're positively rated. One of the things I would say, which is interesting about Amazon, and as you know, my world is derivatives, it's options, it's trying to figure out, are there alternative ways to position? And I would say options in Amazon are about as cheap as we have seen. So if you are uncomfortable that our $12.50 price target is too bullish, or you're just concerned that that downside could be higher probability than we're pricing in, the options are certainly an attractive way to play it right now. If we were to look at the price of the options, go out 3 months, buy an at-the-money call, so that's going to be a call around that 890 strike in Amazon right now. Roughly, it's going to cost you a little over 4% of the spot price. I mean, it is not cheap in dollar terms, but as percent of spot price, this is in the bottom 10 percentile of what we've seen over the last 2 years. So all that being said, if you wanted the embedded protection that comes in options, the options themselves are about as cheap as we've seen.
Okay. David Seaberg, with Amazon, the call that I referenced, not Stacey's group's call, but the call that I referenced from Loop Capital Markets, talked about a potential Amazon Web Services spinoff. I know it's been out there. I think you've talked about it on Fast Money as well.
Yeah.
Do you have to believe the spinoff will eventually happen to love Amazon, or can you just love it as it is if it stays this way forever?
Yeah, absolutely not. I mean, the deep dive work that we've done, I mean, John Blackledge, you probably read his work all the time. Deep dive into the really into the grocery side. The growth in grocery, in our opinion, is really going to drive the growth of the company for the next 5 years. So you look at the consumable side, I think it's roughly a $450 billion U.S. market opportunity, U.S. alone. You look at just, food and beverage, there's another $800 billion U.S. alone. So the opportunity there for them is amazing, and I think that's the biggest growth or the biggest revenue upside we see here at Cowen for the stock. Obviously, you got AWS, the potential of that spinning off, that could occur. Assuming it doesn't, that's not the linchpin to buy the stock.
That would just be gravy? That would just be gravy if it did?
Gravy on top. And look, I think the $12.50 target, I mean, I get it, some of the parts valuation that Susquehanna put on the stock. I think that's an amazingly achievable target. We've got a $10.50 target here. Probably a little conservative, but this is a story that if you're a long-term investor, Brian, and we talk about this name all the time, it's a kind of, I don't want to say close your eyes and buy it. I really do, mean you got to be sensitive to the way you invest, but it is a name you can really kind of back off. And when there are big swings in the stock price, considering it is a very expensive stock or high price stock, not expensive, you just consider it being in there for the long run and let this thing just try to ride out. They're probably in the 3rd or 4th inning, in my opinion.
Yeah, and I don't know, Stacey, if you can address this or not. I do wonder if Amazon will split its stock again. I know it all is the same value per equity, but at the same time, there's a psychological component. Also, for the retail investor, $1,000 a share is a lot of money just to dole out. You're getting the same value, we get it, but it's cheaper. You think a split would help the stock at all? You may not be able to touch that.
I mean, I was going to say, I think that's one, as David had highlighted, I think that's just the gravy that's potentially out there. There's so much else going on with Amazon. If I think about just even my personal shopping, I don't buy anything if I don't go to Amazon first. And I'm far from being internet savvy, so I can only imagine the growth that's everywhere else. And a lot of the different surveys that, again, our analyst Shyam Patel has done have just suggested that Amazon is the dominant force with significant growth opportunities outside of even an AWS.
You get to Amazon from that dial-up AOL account that I hear you use, Stacey. Is that accurate?
That's pretty close, pretty close.
You've got mail. Stacey, thank you very much. David Seaberg, thank you very much. Just different shades of bullishness there on Amazon.com. Folks, thanks for watching. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.